Hey there, so in this video, I'm going to be talking about crypto taxes. Now, when it comes to taxes, there are two specific types that you may be incurring. So number one are capital gains and the other are business income. So there's a difference between capital gains and business income, and in this video I'm just going to highlight some of the key differences between the two. Now before that though, I do want to say that I'm not a professional tax person or an accountant. This here is all of the stuff that I've just kind of learned and gathered myself through research and asking others their thoughts on this over here. And I've also looked at the CRA's website, which is the Canada Revenue Agency's website, the tax authorities in Canada. And I've just kind of put this and pieced all of this here together, and I'm sharing it with you, and hopefully you can gain some value out of it as well. But I do want to say that as a disclaimer, I'm not a tax professional, so if you're looking for something more specific, please do go seek someone out, because I don't want to be responsible for any sort of losses or any sort of issues that may occur should that happen in the future. But having said that, let's take a look at the differences. So just as I've said in the beginning, there's capital gains and business income. So the first one, capital gains, it usually applies to investors. Now these are people who just kind of buy and hold. Now business income, it would be usually applicable to traders. So these are people who buy and are in and out of their holdings more frequently, or just kind of buying and selling. So that's what traders are. And so that's why it would be more so business income. Now there is no exact clear cut definition of what a investor is and what a trader is. So that's why there are some factors over here that the CRA will use to determine whether your income is capital gains or business income. And over here, I do have an asterisk because all of this stuff here I found in a YouTube video from a day trader who went to an accountant to ask what the differences are, and she made a video. So down below I'll link the video in the description, so if you're interested you can check that out. But basically she's a day trader, she trades stocks, and so she wanted to find out what the differences are between capital gains and business income, and so she made that video. But more or less from her video, she says that there's 4 differences or 4 factors here. We have how often you trade, how long you hold the, in this case, coins for, how much time you spend on trading and researching, and how substantial the income is. So this one means in relative terms to your other income. So these are just some of the factors. I'm sure there are more, but these are 4 factors that can help the CRA kind of look at or determine whether it's capital gains or business income. Having said that, so why does it matter if it's capital gains or business income? Well, there's treatment for both capital gains and business income. For example, if we look at the gains, now 50% of the gain is taxed at your marginal tax rate. So that could be 15%, 20, 25, so on and so forth. As you make more money, the tax rate also increases. So that's how these marginal tax rates are somewhat calculated. Now, in terms of business income, 100% of that is taxed at your marginal tax rate. So all of it is taxed, whereas for capital gains, only 50% of the gain is taxed. So that's all for the gains. Now let's take a look at the losses. So your losses can be offset against any capital gains that you incur in the past, current, and future years. So that is for your losses. Now, in terms of business income, only half of the loss can be carried forward, and I believe that's called ABLE, or allowable business investment loss. So that's what can be carried forward. Only 50% of your loss can be carried forward. Now, in terms of the other sort of section, there is none for capital gains because it's a little bit more straightforward. But with business income, you can write off expenses incurred to produce that income. So example, if you're renting a place to trade, then yes, you can write that off. If you're renting a place and you have to, pay for the computers, the equipment, and so on and so forth, then yeah, you can write off the electricity for that as well. Same thing with your internet or your equipment depreciation. These are all things that you will incur, and it can be written off against that income that you've made trading. Now let's take a look at an example over here. So let's pretend that you have a marginal tax rate of 30%. So here, let's just say you bought one Bitcoin for $5,000 earlier this year, back in April, and then you decided to sell it for the $15,000 it hit maybe a couple of weeks ago. So example, all within this year, you would have made a profit of $10,000. You bought it for $5,000, you sold it for $15,000, and so you've made a profit of $10,000. Now, as a capital gain, 50% of this is taxed. So this means that you would only need to pay taxes on half of this, which is $5,000, and that $5,000 is taxed at 30%, and that means you would have to pay $1,500 in taxes, right? So all the calculations are here. This means that effectively you are paying 15% in taxes because you've made $10,000, but you only need to pay $1,500 of this $10,000 in taxes. So you really only have a 15% tax rate. Now, if we look at business income, we have earnings. Let's just say you earned $13,000 in trading, but you also have some expenses you have to pay for example, rent or electricity, equipment, depreciation, so on and so forth. So these are things that you can write off against your earnings. So your profit is now $10,000. So of this $10,000, 100% of it is taxed at your marginal tax rate. So of this $10,000, that means you would have to pay $3,000 in taxes, right? So all the math is here. And this means that because you've paid $3,000 of your $10,000, that means you are paying, oops, I see I made a mistake here. It actually should be 10, but you should really be paying $3,000 out of the $10,000. Okay, so that's how this is calculated. So your 30% in taxes is based off of this $3,000 that you had to pay from the $10,000 that you've made. So hopefully this video has given you better insight on whether it's a capital gain or business income with regards to your crypto. Well, anyways, I hope you found this video informative or educational, and if you did, please give it a thumbs up. If you think that there's someone who'll get some value out of it, please share it with them. If you have any questions or comments, leave them down below because I do check and I do respond. If you're interested in receiving notifications of my future videos, then hit that subscribe button. Other than that, thanks for watching, and I'll see you in the next video. Bye for now.